Hello, everyone. Welcome. Good morning, good afternoon, depending on where you're joining from. And I'm super excited to welcome you to the Navigating Impact Project launch webinar for the theme Climate Adaptation and Resilience, where we're excited to launch the beta version of the IRIS Plus metrics. We're going to wait for a couple of minutes for everyone to join in. And meanwhile, I would like to introduce myself briefly. My name is Oishi. I work at the Global Impact Investing Network as part of the IRIS Plus IMM team, and I lead theme development for IRIS Plus. I'll be moderating today's discussion, where we are excited to have three speakers with us. Molly Hellmuth, representing our theme partner for this theme, Winrock International. Molly is a senior technical director there. We also have with us two representatives from the working group, Malika Anand and Lillian Alexander, bringing the investor experience to this discussion. Malika is the head of impact and ESG at the Catalyst Fund, and Lillian is the senior impact advisor at Mercy Corps Ventures. I'd like to also take this opportunity to give a big shout out to our GIIN team, who have worked relentlessly on this theme. My colleagues from the GIIN IMM team, David, Kellen Gulshan, our consultants, Phil and Jeff, from the comms team, Garrett and Miriam, from our research team, Sophia, from our membership team, Naoko and Maria Juliana, from our development team, Harry, Pam, Nick, and Sharon, from GIIN's executive team, Sapna, Sean, and Amit for their leadership. And of course, our former colleagues whose work greatly contributed to this, Grace Earle, Kelly McCarthy, Giselle Leung, and Lisa Glasgow. And most importantly, our theme partner for the Climate Adaptation and Resilience theme, Winrock International and All Media Network India for supporting this endeavor. So I will briefly start talking about the GIIN, as some of you who may not know. But before that, I wanted to clarify a couple of things that are frequently asked by our IRIS Plus users, both who are new, getting themselves familiarized with the metrics, and old. So those FAQs are, first of all, how is this process? So we're going to go deeper into it, but the shorter version of it is it's a highly collaborative and continuous process. We began working on this theme mid last year, and we went on through different stages, collaborating as we snowballed our working group and we tested these metrics. Those are co-created and used by stakeholders, that is beyond GIIN's memberships. It's not limited to GIIN members only. We have over 150 working group members, and IRIS Plus is currently used as of today by over 40,000 users. And the third commonly asked question is, what is navigating impact? The short version of it is that the beta version of the metrics are uploaded in Navigating Impact Project website for further testing before they are launched in IRIS Plus. So you can see like a before and after. That makes it very easy for us to collect feedback while our users get a playable version of these metrics that we just launched today, and we're inviting your feedback. So what you can do, you can definitely explore the content on the Navigating Impact project, which is live now. And I'm requesting my colleague Kellen to drop the link on the chat where you'll be able to access it. You can ask questions live. You have the option to ask questions. Feel free to use that option. And beyond this webinar, you can also provide feedback offline. And you can get involved because we're continuing to do the working group process. We're continuing to test these metrics with different users and different contexts. So feel free to let us know if you are interested in joining actively. So now going back to introducing the GIIN, we are a nonprofit organization, and we care deeply about increasing the scale and effectiveness of impact investing. We started in 2009, and we have been committed since then through the different activities that we do. We are a network curator. We have a member base of over 450 members. As a network organization, we try to facilitate exchange of their knowledge, best practices, and as well as discussions and debates on key issues that expand the boundaries of this field. We also provide guidance on impact measurement and management as part of our IRIS Plus and IMM team. We also conduct market research, industry-wide research that inform activities of different programs as well as market players. We also focus on capital mobilization by inviting institutional asset owners to take more active role and again push the boundaries of this industry. And we do this as part of achieving the GIIN strategy, which is to mobilize more capital to this cause globally to prevent impact washing. And as field builders, we also try to influence and change mindsets and behaviors that can revolutionize the role of capital in society. So quickly moving to IRIS Plus, and I can see that many of you are here who are familiar with IRIS Plus, but I'll still do a quick overview for those of you who are looking forward to a more deeper overview. So IRIS Plus is a generally accepted system to measure, manage, and optimize impact. And a couple of key features include the signature core metrics set that help you measure the progress towards your goal, followed by a catalog of metrics that you can access anytime to look at any metric and how they can be used and incorporated. An evidence base that is very popular and very useful and impactful to inform theory of change, to make you question how they align with your investment strategies and your impact strategy. Practical guidance catered to the investor need that help you improve your IMM practice. And of course, alignment, making it easier for you to align with industry-leading standards and frameworks if you are aligned with IRIS Plus. And all of this is available for public good. IRIS Plus is aligned with over 50 standards and frameworks. This number is also growing as we continue to build new themes and metrics as part of it. So IRIS Plus is also aligned with SDGs. So every SDG that is investable has a related and comprehensive set of IRIS Plus metrics. So we have 78 SDG targets aligned with IRIS metrics, which means 83% of our metrics actually align with the SDG targets. And all of our core metric sets align to the SDGs at the goal level. The core metric sets are the disaggregated metrics or the Lego metrics that are the key part of IRIS Plus design that allows an investor to tailor metrics towards their impact goals in a platform that is absolutely playable and starting not just you to start with your impact goals. So we do this work in consultation with, we have the current versions of metrics you can see. It has been developed in consultation with 1,750 plus stakeholders across the world. They have been part of our working groups. They have been part of the key stakeholders that we speak to and we test our metrics with to make it consistently relevant to the growing needs of the investors. The taxonomy, this little complex graphic is always helpful to explain how complex these metrics and goals can get when we talk about integrating them on an impact level. And you can see the cross-matching and the interrelationship between different goals is what makes impact measurement and management so complex. And the way IRIS Plus makes it easier for investors is when you select multiple impact goals as part of your impact measurement framework, you get to see strategic goals or investment goals that are impact goals that are related to not just that one, but multiple overlapping impact categories. So the use cases varied. Of course, we have investors who use it to measure and manage their impact of investments or across portfolios. Companies and enterprises, basically, they identify to measure and manage their own theory of change or how it's related to their log frame, to find gaps, to help in reporting and communicating their impact story to better understand their impact strategy, as well as other varied uses like in academia, by startup accelerators, incubators, etc. So I am super excited to introduce the partnership with Winrock International. I see many of the working group members are here. Hello again. And for those of you who are just joining, we have been partnering with Winrock International. We started this work late last year. And we have today from Winrock, Molly Hellmuth, and Molly will be introducing Winrock as well as their work in climate adaptation and resilience and the approach they took as the theme partner for the climate adaptation and resilience theme. So without further ado, over to you, Molly.
Great, thanks. Oishi, can you hear me? Okay, perfect. So good morning, good afternoon, good evening. It's great to see a broad number of participants on this call. As Oishi mentioned from the outset, I'm the Senior Technical Director for Climate at Winrock International, which is a nonprofit organization that works with both public and private sector actors globally and domestically in the US to empower the disadvantaged, increase economic opportunity, and sustain natural resources. So for over 35 years, much of our implementation and advisory work has included a focus on climate change mitigation and adaptation. And we implement over 100 projects in over 40 countries, which engage the private sector, as well as the public and other sectors, but in building resilient value chains and markets. And personally, I've been working on climate change adaptation and resilience for over 25 years, including engaging with a broad range of different stakeholders to help them safeguard investment and to promote the use of technologies to drive climate resilience and adaptation. The collaboration with GIIN was heavily supported by my colleagues Paul Christensen and Anmal van Mali, climate adaptation and sustainable finance experts, respectively, both of whom have worked closely with impact investors. An example I would provide is working with GIIN to support the integration of climate risk and resilience into their investments. So we partnered with the GIIN Resilient Agriculture Fund, which is a $58 million impact fund and the world's first equity fund designed to build the climate resilience of smallholder farmers in Africa. And GIIN supports these farmers by investing in early growth, I guess, stage agribusinesses that enable them to anticipate and bounce back from climate events, which results in increased yields and income. So Winrock support helped GIIN to measure and articulate the climate benefit, both at the impact fund level and at the investee level. And before Oishi goes over the metrics, I'm going to give a brief overview of the background on the adaptation and resilience theme, the constructive development, not the constructive, the consultative development methodology we use for the development of the module on climate adaptation and resilience, and then what investors can achieve by using these metrics. Just a little bit of background before speaking to this slide, but the adaptation and resilience theme was recognized as important by impact investors for some time now. and many in the GIIN network were explicitly asking for guidance on adaptation and resilience investments, noting that climate change is affecting both asset and investment performance, but also that there's a growing opportunity for investors in the adaptation and resilience space. And so it's also clear that there's a need for these investments today, but this need is just only going to continue to grow as climate change is not slowing down and impacts are not slowing down. So the climate adaptation and resilience investment theme was created to address this need, to both guide effective investments in climate adaptation and resilience, but also to support investors in navigating the challenges of such investments. So the consultative process as outlined here, we began by working closely with GIIN to identify a list of key stakeholders, both within and outside of the GIIN network, with expertise in climate and adaptation resilience, metrics in particular, or those who within the GIIN network who had expressed interest in being engaged. So we engaged these investors and interested stakeholders in this process here to better understand their needs, some of the gaps and some of the difficulties that they face in resilience and adaptation investments. And we conducted an initial scoping call with a broad set of stakeholders, and then conducted a survey that engaged over 30 organizations. And these organizations included asset owners and managers, including family offices and foundations, endowments, insurance companies, intermediaries such as investment advisors and banks, non-financial institutions, including service providers, NGOs, and consultants, amongst others. And this really helped us to identify and hone in a set of key strategic goals and themes to address. And, in addition, I'm just looking at the graphic here, we hosted seven virtual working group sessions through April and May, with 20 participants engaging them and getting feedback on some of the early drafts of the metrics and strategic theme development. And we also hosted several one-on-one sessions to further assist in the development of these metrics aligned with the goals and revise the metrics based on all of this feedback. So I guess, next slide, please. So through this consultation, you can see the 4 goals on the left side here. We developed 4 goals within the climate adaptation and resilience strategic theme that focused on improving capacity of communities to adapt to climate risk. So looking to ensure that communities are able to adapt to climate change. The second one was improving household resilience to flood risk, looking at a range of different types of flood risk, including coastal, riverine, and pluvial. Improving power system resilience. And then the last one was increasing agricultural value chain resilience through climate smart technology. So if you look at the pyramid to the right, you can see that we started out with a review of the existing evidence to consider and to potentially align this the goals with. So this included the alignment included looking at the Adaptation and Resilience Investors Collaborative, the Coalition for Climate Resilient Investment, the Adaptation SME Accelerator Project, the Global Resilience Partnership work on metrics, and the Institutional Investors Group on Climate Change's Climate Resilient Investment Framework. A lot of these frameworks and ideas came through our consultations, and some of the stakeholders are engaged directly in these different projects and initiatives. We also GIIN participants also identified a broad range of useful climate adaptation and resilience frameworks and metrics, which included the gold standard, the joint MDB climate resilience metrics framework, the resilience metrics toolkit, and then others coming from the task force on climate and financial risk disclosure, the EBRD, amongst others. So, we had a broad set of existing frameworks in which to kind of look at and to evaluate and to assess in terms of their relevance to the impact investment and the goals that we were looking at here. We also reviewed the existing IRIS Plus themes and try to fit the resilience the resilience themes within that. Without the challenge here, I guess, was just to not duplicate existing IRIS Plus work on themes like agriculture and water, as well as future themes which will be coming on. And there's a new theme that's being developed, which is on resilient infrastructure. So we had to kind of fit within what the demand and the needs were, but also take care to not duplicate the work that had already occurred. In terms of the working group survey, which I briefly went over, but we conducted several stakeholder outreach consultations. And from the outset, we wanted to better understand what investing in climate adaptation and resilience meant to a broad set of stakeholders. So the conversations that we had in the survey that we had were focused, to help us focus on the themes included, first and foremost, were stakeholders interested in resilience as a feature in assets, or investments, so the resilience of investments, and that kind of speaks to the climate proofing of infrastructure or safeguarding of assets, or interested in investing in things that drive resilience. So looking to support resilience through their investments. And these can be embodied by companies, technologies, products, and projects that deliver resilience as a main output. For example, climate analytics tools, precision agriculture, water efficiency software, early warning systems. So we also explored from the outset whether investors were interested in taking a beneficiary-centric approach or a sectoral approach to the goal development. And many respondents were interested in both of these dimensions as they look to them as being intertwined. And so just to note that the community goal listed here is a first of its kind for GIIN because there was a unanimous response to have a beneficiary-centered approach. And then ultimately, we look to define indicators and related metrics that could help investors to stay focused on adaptation and resilience, and to ensure that their investment would continue to deliver on these objectives. So we had an overarching focus on developing more consistent indicators and metrics so that the private sector investor and the related stakeholder community could have a richer, more consistent basis for investment decisions. Some of the questions that came up throughout our consultation were, how do we effectively measure impact? And specifically in this case, how do we measure climate adaptation and resilience impact? Which there's been, for those of you who are familiar, this is not a new question. This has been a broad debate. GCF is working on answering this question for several years now. And when you have a topic as broad as community adaptive capacity and a target beneficiary as broad as agricultural value chain actors, how do you define these thresholds by which positive outcomes are achieved, and how do you select the outcomes that you want to measure? So other key challenges were noted in terms of just tracking the progress of adaptation and resilience metrics, which included it's a little bit of a differential need, but the need for bespoke indicators for different investments, which is slightly different than mitigation, where greenhouse gas emissions or other standard indicators could apply. There were difficulties noted in terms of measuring direct impacts and outcomes, which you just referred to, but in part this is due to the time lag between the investment and the intended result. You needed to measure impact. So when you're investing in something today, how do you know what the impact is going to be without the realization of specific shocks and stressors and sort of that time lag to be able to identify impact? And then difficulties in terms of measuring shifting baselines. So these challenges often necessitate the use of output-oriented metrics, and ultimately we look to identify broadly indicators that would provide a sign that a particular set of adaptation actions and investments would be making progress in the right direction. And also the challenge, we didn't want these metrics to be too onerous to be captured in practice by a specific investor. So just to do a quick transition, Oishi asked me to reflect on this, how this process relates to COP28, since I just returned from COP28 yesterday, a little bit jet lagged. But COP, it brought me the usual set of emotional mix of both being excited, but also a little bit depressed. But I did attend several sessions that focused on climate adaptation and resilience, where this sort of optimism and excitement was quite high. And there was a lot of focused attention. And of course, for those of you who are familiar, I think there was this year 100,000 people. And so many sessions and many, both within the sort of formal blue zone, but also outside of the blue zone, lots of things that were being put on by businesses. So this is more speaking to my experience, but some of the sessions that I attended, focused attention on financing for climate adaptation and resilience really as an opportunity for businesses and private investors, not a burden. There was, and again, related to the sessions that I went to, a lot of buzz related to the recent Boston Consulting Group publication that looked at investments in adaptation and resilience, and indicated the upside, I guess I would say, that companies providing adaptation and resilience solutions could be worth up to 9 times more than their current revenues in future. So really focusing in on the opportunities. And I guess I would say that underlying the optimism was a little bit of a sober recognition that adaptation finance is several orders of magnitude lower than mitigation finance, and it's really not keeping pace with demand. Other sessions I attended were focused on USAID Prepare, which is another US and UAE focused initiative that is really trying to grow and is growing a coalition of major private sector players committed to advancing adaptation and resilience technologies in developing countries. There's also the new, within that Prepare session that I attended, there was reference to a new initiative that's funded by the Bezos Earth Fund and Climate Works, and I think in collaboration with the Lightsmith Group, to develop an updated case for resilience as a private sector investment theme. So in this case for Bezos, they're looking at philanthropies focused on adaptation and resilience investment. We'll develop a joint strategic investment plan to increase these investments in adaptation. And more specifically, these investments will be measured and tracked over time, including reporting on collective progress by COP30. There did seem to be a big focus on COP30 in general, just with the new indices and NAPS being having that timeline of 2025, which would bring us to COP30. More broadly, and just last point, Oishi, in terms of the COP28 negotiations and text, I think there'll be opportunities for private sector actors, for impact investors to inform the next global stocktake and to support the delivery of the global goal on adaptation, noting again those massive gaps in terms of finance and implementation that are required and have been pointed out in the current global stocktake. And as part of this, there was a big emphasis on the gaps in monitoring and evaluation of the outcomes that are critical for tracking our progress and improving the quality and the awareness of adaptation action going forward. There may also be an opportunity to contribute to addressing the loss and damage. For those of you who are paying attention, the Loss and Damage Fund was established on day 1 of COP, and I think it'll be clear the opportunities for private sector as we go forward, but particularly there will be opportunities, I think, for the insurance industry. So with that, hopefully I didn't take us too off track. Hand it back to Oishi.
Thanks so much, Molly. So much to unpack there. I believe moving on with the optimism, There's so much work that we need to do, and there's so many challenges, the ones that you mentioned. So including shifting baselines as well as bias towards outputs, for a lack of evidence. So we care deeply about these evidences, and we, I think I lost my slides. Can you still see my slides? I apologize. So with these evidences, we would really care deeply about the existing frameworks and standards where there are use cases that are emerging. There are discussions and debates that are reaching closer to these evidence. And in addition to the frameworks, we're continuing to look at, we are aligned with GIIN Climate Fund, GOGLA IDE, UNEP's Land Use Finance Impact Hub, as well as UNEP FI hosted ARIC Working Group Adaptation and Resilience Investor Collaborative metrics. And we're building these alignments to make these drafts more and more relevant and applicable. So I would like to briefly show an overview of how the goals look like on navigating impact. So you click on the climate adaptation and resilience goal, you get to see these prompts. You can pick other outcomes or metrics that Molly was talking about from this drop down list. If you click here, you get to pick these metrics as you see fit. You can see the entire list on this scroll down. However, if you also want to follow the way IRIS Plus users will experience this, which is the strategic goals first, you can pick a strategic goal and dig deeper into it. You can look at the structure on the top, the tabs, but I would ask you to pay attention to this feedback option that you can use to give us feedback. You can also download the Excel version of this framework. This structure overview, it follows Impact Frontier's 5-dimension of impact. So, what's the scale of the problem? Who does it affect and in what geographies? How much, change and how many people we can target, the contribution, risk, as well as consequences, and 2 case studies for each of the strategic goals. So you'll also be able to look into our evidence map by clicking on these outcomes or impacts, and you can pick one, and it will draw relevant evidence that has been found by the working group, as well as the study rigor, which has followed NESTA's standards of evidence. So you can also see the entire list of metrics, including the outcome metric for this strategic goal here, and they are all clickable, and they'll give you further details on the rationale for inclusion as well as usage guidance. So you can go back to the top, again, provide us with your feedback as you are going through these goals. So that's a brief overview I wanted to share. Now, moving on quickly, these are some of the list of existing strategic goals that make it helpful for you at this stage to understand why we picked these 4, as Molly had explained. And we also want to make sure that you understand there are many more that exist on IRIS Plus. So when you look at these metrics, feel free to give us your feedback on this as well. So the outcomes, if I briefly discuss for each of these strategic goals, for improving climate adaptive capacity of community, we looked into the outcomes, number of individuals benefiting from improved community adaptive capacity. Again, the measurement challenges there remain in terms of finding, the best possible outcomes. However, the evidence that actually balances out its measurability. We also have the second strategic goal, which is improving household resilience to flood risk. And the key outcome is increased stock of resilient housing units. The third one is improving power systems resilience the key outcome metric being the adaptive capability of power systems, improving agricultural resilience, the fourth goal, which again talks about technology and how it relates to building agricultural resilience to climate shock. So these are the outcomes that are being launched with the list of metrics that you will be able to see on these slides, as well as on the Navigating Impact platform. So without further ado, I would like to invite our dear colleague, our working group member, Malika Anand, who is the head of impact and ESG at Catalyst Fund. And Malika has been part of the working group. Malika, my question to you, if you could explain a little bit about your current work in adaptation resilience, and if you could kindly talk a little bit about how you plan to take these frameworks forward.
Great, thank you so much. Can you hear me all right?
Yes.
Great, thanks. First of all, thanks so much for having me. It's such a pleasure to join you and to be representing such an illustrious working group here and to join all of you. I'm really happy to see lots of my friends and colleagues in the participant section. I thought I would spend just maybe 1 minute telling you a little bit about Catalyst Fund and our goal, our mandate, and then tell you more about how we're trying to integrate the metrics. I know that alongside many of my colleagues in the impact and assessment space, trying to get a handle on what exactly resilience and adaptation is in practice and how to measure it in a feasible and lean fashion that works in the venture and startup space has been a challenge. So we're very, very happy to share our experience in the hope that others can learn from it, and also in the hope that we can receive input and feedback and continue to improve our own practice. So just as background, at Catalyst Fund, if we go to the next slide, Kellen, we are an early stage VC fund, an accelerator backing high impact tech startups building a climate resilient future in Africa. That means that we back tech-enabled companies doing climate resilience and adaptation work only on the African continent. And we have the very distinct pleasure of actually getting to function as an accelerator alongside making our investment, which means we get to sort of work hand in hand with our founders and making their visions come true. And I personally feel that gives us a distinct advantage in actually getting to put a lot of this metrics work into practice in a way that makes sense for our founders and that is sort of feasible and actionable for them. Let me spend 1 more second just telling you a little bit about our thesis areas. I think this is relevant. Kellen, if we can go to the next slide. Just so you can understand how we're actioning the IRIS Plus metrics that Oishi mentioned. I think that, adaptation and resilience is such a broad space, and as the impacts of climate change become more frequent and more profound and more visible across all sectors of the economy, we have to interpret how we measure adaptation and resilience in increasingly complex ways. For us at the fund, we think about adaptation and resilience in 3 verticals. One is around fintech, the second is around sustainable livelihoods, and the third is around climate smart essential services. What that means is that I'm able to take a look at the metrics that the working group has pulled together and select the ones that make sense for my portfolio and my portfolio companies. So for example, the metrics around agriculture and food security fit very nicely into our thesis around sustainable livelihoods and ag and food security. But let me come back to that in a second. Kellen, if we could maybe just skip forward a few slides, I'll try and make up some time. I'm happy, of course, you guys will get it to see these slides later, but here's a kind of overview of the portfolio metrics we track across all of our companies. We have some ambitious targets set around the number of users that will experience improved climate resilience. Again, this echoes one of the core metrics that the working group has proposed in this beta version. But also some mitigation metrics. You'll see carbon emissions mitigated. We take a view that you can't work on adaptation and resilience without really addressing or keeping an eye on mitigation. Otherwise, you put folks at risk for maladaptation. So we include that here. Things like hectares sustainably managed. Again, echoes what we've seen in the metrics. So we're very happy to see things that we've already been doing being reflected in the work in the metrics that the working group has proposed, and of course look forward to evolving these as we go forward. Let's skip forward a little bit, Kellen. Here, actually, let's stop with this one. One more, one back. There we go. So I think it's worth just pausing for a second on the difficulty or the challenge that all of us face in wanting to create rolled up portfolio-wide metrics that really allow us to demonstrate the power of the entire fund and the entire the portfolio, the entire scope of the portfolio, but while also allowing for the specificity of the individual models. So the way that we've managed to balance that is that we have a set of 6 metrics that the entire portfolio reports on. And again, those align very well with some IRIS metrics, IRIS Plus metrics, and you'll see the notation there. And then we have a series of more customized metrics that, again, we ask, that are specific to the portfolio companies and the models that they're launching, but that tend to be shared. So, for example, all of our insurtechs tend to report on things like monthly gross written premium and number of users who are accessing insurance for the first time. But that would not be a portfolio-wide metric, but rather a metric that's customized for only the insurtechs. And I think that this kind of approach gives us the opportunity to both represent the power of the portfolio I mentioned, but also the diversity of models that it will take to get adaptation and resilience work done, and the need for us as fund managers to represent that diversity in our portfolio, both for financial reasons as well as for the impact that we desire to have on the world. We can go one slide forward, Kellen. There's one piece of work that I want to highlight, which is that, especially those of us at the early stage and in smaller funds, we have limited ability to do a ton of work around impact and impact measurement just because of resource constraints. We're very fortunate at Catalyst Fund that we are able to operate a philanthropic sidecar that helps create some of this public good research work. Via that, we've developed a WhatsApp chatbot that our portfolio companies can use to actually periodically collect resilience and adaptation metrics data from their users. And what you see here is a series of questions that they can kind of choose from. We help them set up the bot, do a first round of actually survey and help them with the analysis, and then leave them with the technology and the ability to continue deploying that data collection over time. And I wanted to highlight this for a couple of reasons. One is just to give a flavor of what's really possible. I think when we give founders and startups the tools to really do important data collection and impact work, particularly given the now lean methodologies we have via tools like WhatsApp, and also how important it is to have these practices and abilities embedded in the early stages of startup life. I think some of my colleagues who are on the call who are investing more at the growth stage can speak to the difficulty in trying to create impact culture and impact management practices at startups when they're already at growth stage, when they already have 200 employees. When I think we can start to do these practices at the earlier stage, that means that by the time startups are ready to scale, the data is there, the collection is there, and not only that, we have these sort of beautiful longitudinal stories to be able to tell over time. I know that we're kind of running short on time, and I know that Lillian has a lot of interesting things to share with you. So I'm going to stop here, but please invite you all to contact me and invite your comments and input.
Thanks so much, Malika, for that wonderful overview and showing us how those metrics look like in real life. With that, I'm super excited to invite our next speaker, Lillian Alexander, Senior Impact Advisor at Mercy Corp's Venture, who's also a part of our working group and bringing the investor perspective to this work. My question is the same to you, Lillian. How do you plan to incorporate this work as part of your IMM framework going forward?
Perfect. Thanks, Oishi. Hi, everyone. My name is Lillian. I lead impact measurement and management at Mercy Corp Ventures. I'll give you a bit of overview of just who we are, what we do, and then talk about how we have been thinking about climate adaptation and resilience over the past several years, and then specifically how this new IRIS Plus theme really jives well with what we're doing and why we're excited to be using the metrics. So Mercy Corps Ventures is an early stage impact investor focused on climate adaptation and resilience solutions in emerging markets. We've been investing since 2016, and we have a portfolio of 47 companies across Sub-Saharan Africa, Latin America, and Southeast Asia. Next slide, please. Similar to Catalyst Fund that Malika just mentioned, we are also a thesis-driven investor, which means that our investment strategy and our impact strategy both stem directly from our climate resilience thesis, which is evidence-based and identifies challenges we're trying to solve, as well as potential solutions in 3 key areas. The first is adaptive agriculture and food systems. The second is inclusive fintech. And the third is climate smart technologies. You can head to the next slide. I won't go too in depth about all of these, but I'm happy to share the link to our full investment thesis, which is public and open for feedback and input. But just to give a bit more of a snapshot here, this is sort of what we're focusing on within each investment area. And here's sort of a subset of our existing portfolio that sort of fits within each of those. We do have a lot of overlap. And I think the important thing I wanted to point out here is that we are thinking about climate adaptation and resilience across all 3 of these categories, not just in the ag space, which is where sort of the research and rhetoric has been in the past, but also how can inclusive fintech promote climate resilience, and same with some of these climate smart technologies as well across the community level, which aligns well with one of the strategic goals. Can go to the next slide. This is a visual representation of how we as Mercy Corps Ventures think about the relationship between the end users that we really care about, which is here on the left, climate vulnerable populations, and the solutions we're investing in. So at the top, these are the climate smart solutions that are being developed by the companies that we're investing in and those that we're supporting through our pilot grants. Our theory is that these solutions are helping to actually enable climate adaptation, allowing climate vulnerable populations to actually take those actions, make those shifts that are needed to adjust to, the changing climate. And in turn, these are building climate resilience for those individuals, households, and communities. And we depict this as a cycle rather than sort of a linear process, because we know it's ongoing. It's not a one and done situation. This type of change is complex. It takes time, and it needs to be continually fueled with, the technology and investment that's needed to really allow this to work. Next slide, please. Wonderful. So this is our working framework of how we as Mercy Corps Ventures analyze and understand the potential climate resilience impact of all the companies that come through our investment pipeline. So again, across all 3 of those investment thesis categories. So similar to what's been said already, like we were also sort of grappling with the question of how do we measure climate resilience impact? And we really wanted to understand this for ourselves and be able to understand it for our portfolio. And similar again to what's been mentioned, we quickly understood that climate resilience can mean so many different things to so many people in different contexts. It really is context specific, and there is not one sort of one size fits all definition or metric. So we took the approach to break down the climate resilience impact into different stages to determine, where a potential solution might actually be having impact. So we came up with prepare, adapt, recover. We didn't, this is really aligned with a lot of the other frameworks and taxonomies that are already out there. These were what made sense for us and our investment process. So at the prepare stage, we're really looking at solutions that are giving users access to the right information or knowledge so that they can identify and assess climate-related risks and opportunities, use that knowledge to actually make informed decisions, plan ahead, and take early action before a climate event occurs. At the adapt phase, we're thinking about risk management. So while a climate event is happening, it could be a sudden shock like an earthquake or a hurricane or something, but it could also be a longer term change, longer term changes in temperature, weather patterns. So this is really about how can users avoid, mitigate, transfer that risk to reduce the negative impacts and or leverage beneficial opportunities. And the third stage at Recover addresses what happens after a climate event occurs and how is a community able to return to either the state they were in before the shock or ideally an improved pre-disaster state. So this is really looking at how can we ensure that individuals and communities are better off than they were before, and how can we reduce this sort of chronic vulnerability to future shocks and stresses. So that was a lot to give you, but I'm going to walk through on the next slide, please, Kellen, a specific example that will hopefully help to sort of contextualize this a bit more. So this is a portfolio company that we've invested in that's providing parametric crop insurance to smallholder farmers in East Africa. So these are farmers that are primarily practicing subsistence agriculture on small plots of land and relying on rain-fed agriculture. And if we try to apply and use, the Prepare, Adapt, Recover framework to think about how could this company perhaps have a climate resilience impact at these stages, here's sort of what we might think about. So at the prepare stage, crop insurance, is to help prepare for a potential, drought or flood situation. So if the farmers are actually getting this coverage ahead of time, then it could potentially help improve, their adaptive capacity. And in order to ensure that there would be impact at this stage, the company has to be thinking about how are they raising awareness and marketing crop insurance. We all know insurance is one of the toughest things to actually sell and really requires a lot of trust building and relationship building. So how is the company providing the information that's necessary for farmers to make an informed choice about whether or not to purchase an insurance policy, and how are they ensuring that the policy is affordable to them and accessible to them as well? So these are some of the things we might ask ourselves to determine, does this company have climate resilience impact at the prepare stage? At the adapt stage, like I said, we're really thinking about risk management. So if a smallholder farmer is covered by the insurance policy, that's great. It gives them peace of mind. They have to really be able to trust that it's going to work properly and that, the payout will be triggered accordingly, which requires the company to be having really accurate, local, context-specific data that's actually going to ensure that the product works as it should. And then lastly, at the recover stage, in the event of a climate shock, which would actually trigger the policy to pay out, farmers would ideally receive a payout. And in order to ensure that there would really be climate resilience impact at this stage, is the payout coming at the right time, at a time that makes sense and that is actually going to cover the losses for farmers? Is it a meaningful amount? Is it actually going to make a difference to these farmers and farm families? And how are they going to receive the payout? Is it going to be a long, burdensome process, or can they receive it automatically through mobile money or whatnot? So in talking through this example, I gave a lot of caveats about, what would have to be true about the company, about the specific product design, about the characteristics of the users, in order for there to be positive climate resilience impact at all three of these stages. It's definitely rare. I used an easy example where it could perhaps demonstrate impact at these three stages, but it doesn't necessarily have to be that there's impact at all three of these stages, but it's going one step further and not just assuming, because this company is working with smallholder farmers, yes, it automatically has climate resilience impact. But we're actually drilling down a bit further and dissecting that to really get deeper and unpack where that impact might be happening, and to what degree, and for whom. So last slide, please, Kellen. Just wanted to kind of demonstrate this map and the connection to how we're mapping our internal resilience, climate resilience framework and analysis to the GIIN's IRIS Plus system. And we've been strong supporters of the GIIN and adoptees of the IRIS Plus system since our founding. And so we've been really excited to see this new strategic goal or this new impact theme coming together. And again, just using this specific example of the parametric crop insurance company in our portfolio, how we might use the new strategic goal, the new metrics to measure and manage the impact performance of this type of a company. And yeah, for this one specifically, we saw some strong alignment with two of the strategic goals that were presented. So the community level one and the agricultural resilience through technology goal. And we've also, it also maps really well to one of the GIIN's existing impact themes, which is focused on smallholder agriculture. So at the beginning, when Oishi showed that slide with all of the different, mapping to different goals and themes and metrics, that's where the customization, depending on the specific sector, the specific technology, can be nice to add. And these are just some examples of a few of the metrics that we might use in this example again. So I will wrap up there, but the next slide has my email. If anybody wants to reach out, I'm happy to connect and chat further. I'll hand it back over to you, Oishi. Thanks.
Thank you so much, Lillian. And that was a wonderful summary, and I think a great discussion on the practicality of these metrics. We have one question, which is asking about how these impact goals are linked with the outcomes. So just quickly, if I'm just quickly sharing the slides back. So I think the question is not how these are linked. I would say that when an investor, when you are looking into the IRIS Plus platform, you get to see either the SDG targets or the impact categories as part of the IRIS Plus taxonomy. So if you're picking, let's say, climate and agriculture, you will be able to see this strategic goal, like how to improve agricultural resilience. And when you click on it, you'll see this listed as one of the outcomes, which is resilience to climate shock. And when you dig deeper into this outcome, you'll be able to see these list of metrics right now. So they would include a set of metrics that collectively measure this outcome. And you'll also find evidence that backs this logical relationship between the metrics and the outcome. And these metrics will be further disaggregated following the IRIS Plus core metric sets development process that we are excited to work on right now. So thank you for that question. And if any of you have any other questions, feel free to reach out. And we are really, really thankful that you joined us and stayed through the full hour with us at this webinar. And we hope you'll stay tuned as we continue to update these drafts and invite more and more feedback and active participation from all of you. I would like to thank again. I would like to thank all of our panelists, as well as our theme partner, Winrock International, and our this work is supported by Omidyar Network India, as I've mentioned, so truly grateful for their support. And we will share the recording of this webinar as well as the relevant links and contact details. So hope everybody enjoys the holiday season coming forward. Thank you.
Thank you, everybody.